In this video, Professor Jeremy Siegel emphasizes Powell's reassurance to the market despite a reduction in GDP forecasts. Siegel also notes that Powell remains optimistic about the economy and suggests that while tariffs might increase inflation, the Fed is unlikely to take action unless these prices hikes affect inflation expectations.
Strong. He wasn't alarmed. He said he saw the sentiment drops in the consumer sentiment and some business sentiment, but didn't say that always translates into slower economic activity. But as you said, remains very flexible to move on either side. And that's sort of an optimal combination. I also think that he was pretty clear that the Fed would not react to the tariffs if they brought about price rises, which he thought would be temporary. And that was something I was definitely looking for. I was wondering, would he go against those tariffs or not? He seemed to imply that he would not go against those tariffs unless it sort of caught on to inflationary expectations or went into some other areas. And I think that the market really probably took some comfort in that statement.
And just to be clear, the dot plot, the summary of economic projections, did imply core PCE inflation going up by the end of this year to 2.8%. It had been 2.5%, and yet collectively the median was still for 2 rate cuts. So there's some tolerance of higher inflation implied there. And in fact, he did say he thought that tariffs perhaps were built into that projection to some degree, although he, as I mentioned earlier, he said, look, the Trump administration's got a lot going on with policy changes in play for immigration, trade, regulation, and, of course, fiscal spending and taxation. And they're going to have to sum up the net effect of all that before deciding what it means for policy, Professor.
Yeah, and absolutely. I mean, it's a big drop from 2.1 to 1.7. It's the biggest drop that we've had in a 3-month period in Fed forecast for growth since the pandemic. I would have liked to have known how much of that drop was due to the big slowdown, as we know, in the immigration situation, and how much was a drop that he, thought could be due to the uncertainty and dislocations caused by the tariff. He didn't tease that out, although you also note that the next 2 years also showed a slight drop in real GDP growth. So I was wondering if that is immigration or is that more tariffs? Although the very long-term growth, of course, that I think is 2028, Trump's end of office, that number wasn't changed. But I would have liked to have sort of teased out some of those sources of that real GDP change, because certainly it was substantial.